In this video, a report from one of the world's largest asset managers, Fidelity, who are getting into crypto and now telling us exactly where the money will be flowing over the next few years. So if you're invested in crypto, let's look at where the money is going so we can make better investment decisions. We'll also look at the crypto market because we are actually, for the first time in a very long time, mooning. It's a long time since we've seen this. Dogecoin is up because of Elon taking over Twitter. And so people are speculating that this is the start of Dogecoin being integrated into Twitter. But what this shows us, apart from the meme coin now, getting back into the top 10, is that more and more crypto is becoming something that is being integrated into everything else that we do. Crypto is the future for many things, for platforms, for finance, for money. And so let's go over where that money is flowing in this report. I'll leave timestamps for everything down in the description. Firstly, though, as we can see, crypto has actually got a bid underneath it for the first time in a very long time. Seems like we're actually making a set of higher lows, which is actually a very good thing. You can see the kind of low round here, consolidation at a higher low, and then we're moving forward. Still think the economy over the short term has a lot of hurdles to overtake for sure, but we can see that, people are getting back into cryptocurrency because things are happening in the real world. Binance Smart Chain owns a massive stake in Twitter these days in the private company. And this is what the head of Binance is saying. We're excited to be able to help Elon realize a new vision for Twitter. We aim to play a role in bringing social media and Web3 together in order to broaden the use and adoption of crypto. Binance now own $500 million worth of Twitter, around 1.3%. And so they're going to have a lot of influence on that board in terms of how crypto is integrated into Twitter. This looks to be something that Elon is going to do in terms of setting up a Twitter protocol potentially through the use of blockchain. Dogecoin really can't support that. Dogecoin is similar to Bitcoin in that it really is just payment system. And so Dogecoin as a currency, not my personal bet, but players like Binance that can actually use smart contracts and separate networks to do pretty much anything that they want. So crypto is coming into mainstream use cases because of its advantages: cheaper, faster, auditable, public, more trustworthy. Our initial commitment remains the same as we look forward to exploring opportunities to grow the partnership in the future. As we can see, ETH is up massively off the back of this as well over the past few days. Around $500 there in a week. If you want to trade on Binance, check out the deposit bonus, biggest exchange in the world. Deposit bonus in description. If you are a trader as well, check out Bybit, up to $4,000 deposit bonus in your futures trading account. If you're new on those platforms, get those deposit bonuses. Let's look at the Fidelity report then to know where the money is going to be flowing, because I think most of this bounce that we've seen really has been retail driven again. Retail driven bounces are great and fantastic, but the big money coming in is what's going to tell us, what's going to grow over the longer term. So let's have a look at what Fidelity have actually done here. They sampled people that are going to be investing, right? Financial advisors, high net worth individuals, family offices, even traditional endowments. Are these guys getting into crypto or are they on the sidelines? We'll have a look, right? So they asked people from around the globe. So this is going to give us a great example of actually what people are doing right here. So when they took this data, look at the time period where they took this data, pretty much right in the middle of the absolute dump of crypto prices. And so let's see how people's opinions were. Price does affect people's opinions on things. And so actually we're probably getting a pretty good sample of what people think in the cold hard light of day. As you can see here, the positive perception of digital assets actually went down. Not too much of a surprise here, considering a probably more than 50% dump in the value of these cryptocurrencies. But what I can see here, and this is a theme through this report, is the US is definitely lagging behind in terms of the adoption and also their thoughts on how crypto can help them. This may be because other areas in Europe and Asia especially maybe have less mature operating systems and financial operating systems. That could be true for the most part. It really depends on the country. But as you can see here, really Asia and Europe pulling way ahead in terms of what they think of digital assets. US is lagging behind in terms of what they think here, but overall positive perception. But the really important thing as well is who actually holds this stuff. So if you hold right now, you are part of the early adopters in terms of investment. It's my opinion that crypto will just continue to grow as it becomes an integral part of the financial operating system, just like the internet now is the thing that people use to communicate. Crypto is just a better version of doing finance for many reasons. So as you can see here, we're part of the early adopters right here in terms of crypto hedge funds or hedge funds generally who, you know, VCs, they have a remit to just invest in new things. And so they're obviously going to be very large investors right here. But high net worth individuals and financial advisors actually are, you know, very good in terms of their adoption as well. As you can see on the right hand side, the red part right here is essentially traditional finance and pension funds. They've got absolutely no business owning any of the Web3 type of assets until they are businesses that are generating large amounts of revenue. Remember, pension funds, investment funds, their remit is really to just buy revenue streams, right? Because they have liabilities, which is their pension fund, their interest that they pay right on the pension, and that's what people need. And so they've got no business owning, you know, this kind of venture stuff. Now, a lot of these funds actually have separate investments in other companies that manage money, for example, these crypto funds. So they're all connected in a way, but as you can see here, we're really a long way from this lot getting involved, but they definitely could as the industry matures. So as the industry matures and more value is created, more revenue streams are created, these guys are going to get on. So it just shows us how early we are, but definitely this lot have a very good adoption. So it is still an alternative or small asset class, but as you can see, people getting involved here are definitely pushing it into just a different asset class and not alternative or tiny. It's definitely moving on to just being a separate asset class. The perception of crypto is changing as well, and this is because of all of the products and services that are growing on top of this and letting people do things that they want to do. Mostly in finance, there's really two things you can do in finance. One is gain money through a capital gain by taking risk, and the other is gaining money through yield by essentially lending value to someone else and then paying you back. It's really what finance is about. And so as you can see, opinions on this are changing over time, which is really interesting. So you can see the high potential upside is pretty much the same, right? So yeah, it's an early asset class. People want that capital gain. Really important though is, as we can see, the participation in DeFi is growing a lot. You have yield opportunities, right? To lend money to people that pay you a yield. And so that's what a lot of investment funds want. They want yield, and having decentralized finance, lending, borrowing protocols, also options and futures protocols that use money and use different types of strategies, that is all being filled out right now. And it's going to be a huge driver for adoption and investment in the space. And the more use cases that are on these smart contract platforms, they will obviously continue to gain value in the strength of people using them as well. As you can see here, uncorrelated to other assets is really, really dropping. Now, remember when they took this survey was when everything was dropping off a cliff, and actually correlations went to pretty much like 0.85, which is, you know, pretty much a 1-for-1 correlation. So stock market down, bonds down, crypto down, Bitcoin down, right? And so as digital assets grow, they definitely won't be uncorrelated in what they're doing to the other financial markets. It just makes sense that the more people that own this stuff, it's going to be correlated, right? And as we can see, Bitcoin and crypto really correlated mostly to, you know, bond yields, the state of the economy as well. And so you're not going to get uncorrelated diversification from investing in crypto. The one thing that people want is obviously larger upside. And because you're taking risk, you're getting a higher volatility in these relatively small names. And so higher potential upside, with that comes higher potential risk to the downside as well. But uncorrelated, not so much these days, but correlated with, you know, growth of the economy and having potentially much higher beta. So that means higher volatility to the upside is what people are actually looking for, rather than just, you know, uncorrelated. I'm going to get myself out the way because what you can see here is yield opportunities. See how more mature investors are coming into the space and they're looking at DeFi and yield, right? So they're looking at using the opportunity of the market itself in order to invest and earn yield. So very interesting as more mature players are going to come in, they'll definitely be looking for this. In terms of the barrier to entry for many of these firms, a lot of these barriers to entry are just not going to exist in 5, 6, 10 years time, in my opinion. So as you can see, what most people or most investors were worried about essentially is they don't understand this stuff, right? And that's an opportunity for us who actually do understand this stuff, research it every day and understand where users are and where the industry is going. So again, this is an opportunity. There's opportunity in the financial markets to basically take money out of people who, are just behind the times, right? So as you can see, price volatility, yes, well, that's the price that you pay for getting outsized returns. And so I guess investors, in terms of, you have to remember these investors, right? These are professional investors that are managing money. Their job is basically not to get sacked. Okay, so that they actually don't want to take any risk, and they don't actually want to make money like we want to make money. What they want to do is just essentially be able to charge their clients fees for managing their money. And so what they want to do, and what they want to make sure to do, is not have this price volatility. Because how do you explain to a client that the Bitcoin that you traded is down 70% on the year? How do you explain that to them? It's extremely difficult. When people give other investment managers money, what they're doing is saying, I want you to just basically manage some for me, maybe get like a 1 or 2% outperformance compared to the S&P, right? And so if you're selling people on this stuff, this is basically investment managers saying, I've got career risk if I invest in this stuff because, one, I don't know about it. And that means, two, I can't really explain to people why things are down 80%. And so this is going to change over time, but this is the opportunity that early investors have to actually research things and get involved when this lot aren't in yet. If you want to know more about putting a portfolio together, do check out the Crypto Investor course in the description. It's helped so many people here. You can see the portfolio section where we just go through putting together a portfolio of how risky you want to get. A lot more videos here, up to 300 videos as well. So check that out if you want. Also check out the Binance link in description to a deposit bonus there. And if you're a trader, Bybit as well, a great deposit bonus. I'm James with Money ZG. Cheers for watching, and I'll see you in the next one.